It's a pleasure to have you here today. How are you, first of all?
Hi, Michaela. Hi, Michaela. Nice to meet you,
Nice,
and
nice, very
great to
cool.
be here.
Would you like to give us a little bit of introduction of yourself and your personal background?
Yeah, sure. My name's Anil Stocker. I am the founder, CEO of a company called Kriya. I started Kriya in London. I came to London as a child, as 11, 12-year-old, went to school here, went to university in the UK, and then, coming out of university, joined a big investment bank, Lehman
Ooh,
Brothers, actually, in their private
what a
equity
name.
fund. So that's probably a name that, yeah,
Yeah.
everyone knows that name. In fact, there were many Italians at Lehman Brothers in London. And, I worked in a fund that was buying businesses. We would take kind of majority stakes in businesses. I guess from that period, I saw kind of working capital, how businesses raise money, etc. I was at Lehman Brothers from 2006 to 2008, the boom and the bust. And then sort of was really saw firsthand the financial crash and how everything that we knew to be sort of true, or that the system was working, sort of all crashed down. And I think that was like an interesting backdrop for my journey into fintech, right? Because it got me to question things and see how technology could be used to solve problems. So yeah, that's sort of, I guess, a quick background, and happy to chat
Cool.
on any of those themes.
First of all, I absolutely need to ask, did you experience like the burst of the bubble in firsthand, or you were coming out of the company before that?
Well, yeah, very luckily, I left Lehman Brothers
Wow.
2 months before before it went bust. Well,
Yeah.
a lot of people were being fired. I knew that my time was up there, so I went with a colleague. Actually, suggested that we sort of move to a smaller place. I had no idea that it was going to go bust, right? And I knew many of people from my cohort, friends who were there on the day, and some of them were actually
Wow.
photographed, like
With the
coming out
box, with
of the
the,
building
yeah.
with those boxes. Yeah, those iconic photos. I mean, I think it took everyone completely by surprise that actually happened. And obviously, in hindsight, I think Lehman was obviously relatively unlucky because a lot of the other banks got
Yeah,
bailed out.
also true.
So, so it was an interesting time. They were. I think that really prompted the real panic when Lehman went bust, and Bear Stearns had gone bust and had been acquired by another bank. I think it was Bank of America, and then yeah, I guess like people right until the end. I still remember some of my bosses were saying, now's a good time to buy Lehman stock because it was so cheap. So a lot of people didn't
Yeah.
realize how
I
bad it
think
was.
it's one of those, scenarios, or one in a lifetime situation that you hopefully are not in again anytime soon. But also very interesting to experience firsthand, because there were a lot of things going on at the time, a lot of bad things also happening, of course, but also a very, very interesting experience. And what about your jump from investment banking to actually a startup world? Because I've been experiencing, this with many different people, and many different professionals, that kind of a jump is not easy, because there are a lot of people that are okay in a startup environment, and a lot of people that, yeah, they don't actually fit in.
Absolutely, and remember that back in 2011, 2012, the startup landscape
Mm,
in Europe was totally different. I mean, in London, like most people were employed in banking or consulting or law. There was not many entrepreneurs. There was
yeah.
no WeWork. There was no ecosystem. So, when myself and my co-founders took the sort of jump into entrepreneurship, it was really like first movers, I would say, in London. I mean, there was not many success stories of tech companies, and now it's a totally different picture, which is great, right? It's really improved. But, in my case, I kind of always had entrepreneurial interests, like growing up, like from school, and I took part in the UK, we have this young enterprise scheme, so it encourages school kids to sort of set up these businesses and enter competitions. I really enjoyed doing that. We had a great team. We did some cool stuff. I also at university, I like to take ideas and turn them into reality. That sort of 0 to 1 journey, from even if it's like launching a newspaper at university or creating something from scratch. It is really interesting for me. I tend to have a fair amount of ideas. I kind of like the chaos and sort of trying to get stuff off the ground. I actually find that very exhilarating, gives me a lot of energy. So I was lucky that at university I met some like-minded people. There was, even then I was at Cambridge University, and there was not really a big sort of entrepreneurial scene. I remember there was like maybe one entrepreneurship society with about 10 members in it. So I met some people, we stayed in touch. And when there was all this turmoil in traditional financial markets, I got talking to one of my co-founders, and we were sort of like, now's quite a good time, because the opportunity cost is not super high. Traditional finance is going through a tough moment, and in this sort of crisis is where you see opportunities, right? And we were lucky. We had worked for 3 years, so we had saved some money,
Yeah.
which helps, because being in London and covering the costs of living in London. And I remember I did the maths, and I sort of was like, I have about
Runway.
2 years of cash, if runway of my own cash. So, even if things don't go completely right, I have a bit of time. But, plenty of people, when I quit my job, so I went to another place after Lehman, I was doing quite well there. And when I quit my job, I remember my boss saying, are you sure you want to do this? Is this a good idea? However, there was I worked for a company where there was sort of a US arm and a UK arm, and the boss of the US arm was actually really supportive and quite excited, and that was really nice, actually. Maybe
Yeah.
that tells you the difference between
It's
US
it's
mentality
that kind of
and the
mentality that,
British mentality.
also when you consider a lot of the US based startups in the fintech ecosystem, they have a lot of business angels that are coming from, past experiences of the founders, and a lot of backers and everything. So it's absolutely about the mentality, in my opinion. But I think that you actually started this kind of venture in probably, one of the early stage of the UK fintech market, because UK fintech market actually skyrocketed. I think that between 2010 and 2015, like Revolut is from 2015. I think that you were among the first one to actually do something like that in that period.
Yeah, 100%. I was talking about this, actually met up with one of my co-founders a few weeks ago, and we really were like first movers. And sometimes it's not good to be the first mover because things are harder, right? Like, I still remember there was like, we
Hmm.
wanted to build like a risk model to underwrite small businesses who are looking for loans and credit. And there was no API to company's house, there was no connectivity to company's house. You had to go in and like literally physically buy documents one by one and download the PDFs. The data infrastructure, there was no banking as a service. There was none of this infrastructure that came later, which means that it's much
Absolutely,
easier
yes.
now potentially to get stuff off the ground. And I would say that the first wave of we were sort of fintech before fintech was a word. The word fintech didn't exist. So we were there. There was a couple of companies in London trying to. There was quite a lot around kind of online lending, peer-to-peer lending. So there was this sort of democratization of finance around, hey, we can connect businesses or to people who have capital and bypassing the bank system. So it was all around, like, you don't need to just be a bank. Let's open it up for more competition. And that was a big ethos of the founding sort of teams in fintech in London. There was companies like
Yeah.
Zopa, Funding Circle, RateSetter, ourselves. We were called Market Invoice at the time. We all were trying to do these marketplace models, and everyone was actually trying to avoid to be a bank, right? And then like, fintech, fast forward, and the likes of Revolut, Monzo, Starling came along in London. It was all about reinventing being a bank. So it's been through a few cycles. Initially, the VCs wanted to back non-bank lenders, and now
Yeah.
everyone's
Yeah.
backing banks again. So there's a little bit of circularity there. No, yeah, it was. Look, we were definitely sort of the pioneers, and I like to think that we inspired the next generations, and now it's sort of all coming together in some way.
Everything is very, very interesting, to be honest, about that kind of period and that first experience. But I was wondering, in the moment when you launched actually Kriya, there wasn't, a huge amount of interest or a huge amount of momentum in the UK fintech ecosystem. But then, like, fast forward 5 years later, the fintech ecosystem was booming in the UK. What do you think was actually the enabler under that point of view? So how a country like the UK actually started one of the probably the best fintech ecosystem in the world, maybe after the US, but one of the most successful fintech ecosystem in the world.
Yeah, look. I think it's driven by a number of factors, but some themes that I think stood out for me were a very supportive,
Mm,
government in power. So I remember the coalition government, David Cameron and his advisors. They actively kind of reached out to us, and we were invited to Downing Street. We were invited to round tables. They really wanted to hear how they could make London like a fintech powerhouse. And I remember them saying, and we were all sort of agreeing, after Margaret Thatcher and Big Bang and liberalisation of financial services, London was the place to be for financial services. They wanted
mm.
it to be the place to be for fintech, right? They wanted to continue that evolution, and they put a lot of time and effort into supporting the ecosystem. That also stemmed from you know interesting regulatory things that they did around open banking. I remember they really wanted to push open
Mm.
banking, availability of data. They wanted to digitize companies house. So companies house got a whole new board. Companies house
Yeah,
is the company registry. So allowing more access to the data, and also encouraging investment as well. And I remember the US venture capital funds coming over. More venture setting up, and also that coinciding
mm.
with a period of low interest rates, so there was more capital going into startups through these schemes, EIS, that also came. So it wasn't entirely driven by the government, but I think it was a supportive regime. It had, obviously, the talent was here as well, right? Like from financial services, there was a huge amount of talent, and if you look at a lot of the founders in fintech in London, they part of the founding
Mm.
team has a financial services background. It's not just tech. So whereas Silicon Valley and Berlin maybe are
Yes.
very tech centric, there
That,
is this
that's a
financial
very
services
interesting point.
expertise here in London.
So first of all, I totally agree on this one. I mean, I think that there was like, the right mix of, regulation, government supporting, low tax rates, so a lot of capital available, and the right amount of talent that was free at the time, mostly because of the problem that there was in the traditional banking system. But coming to your last point, and being with my experience in the Berlin fintech ecosystem, I think that Berlin, but also for example Paris and other countries, they are very very tech oriented under that point of view, while London has always been very financial oriented. A lot of people that were coming from that industry with those kind of experiences, and then you put the tech on top of it. And I think that that's a really good point in order to build the ecosystem from scratch. But I think that without all the other components at the same time, it wasn't possible. So this is also maybe why it's such a good example, such a unique example, because you don't have the same kind of settings in Berlin, in Milan, in Paris. Probably maybe New York is something that is coming closer to that, but everything else is kind of
Yeah,
very, very distant.
yeah, definitely. If you look at,
Mhm.
for example, Nikolai from
Yeah,
Revolut was also in financial services, right? There's a lot in fintechs. You have to be good at a lot of things. It's not just about writing amazing code and having a great tech product. You have to understand things like compliance, risk,
yeah,
collections. When things go wrong, what do you do? There's more regulation of financial services, so it actually requires someone who's understands the full range of issues. And of course, London. Look, I mean, London is a huge place, amazing talent from all over the world. It was very open. Many people could come here and work here easily. Lots of connectivity to other emerging markets. People would come and be students here and stay here. So it was such a melting pot. And when you have some of the big successes, I remember like TransferWise doing well in the early days.
of course.
That attracts more and more people.
Absolutely, yes.
Yeah.
And tell me about like the launch of the company itself. I mean, how did you set it up, first of all? How did you scale the first customers? How was that period in time, doing things firsthand from scratch?
We really subscribe to this philosophy of the lean startup. So we were bootstrapped. We didn't raise a lot of money. There
Mm,
wasn't very much money around, right? Like when we tried to do our seed round. I still remember we did a 350K seed round. So we knew that there was an opportunity because small businesses in the UK were really struggling to access capital. Banks weren't lending to them. The big corporates they were dealing with were extending payment terms. They were very cash strapped. So we knew there was an opportunity. We knew that there was a lot of people who wanted to fund them, but were not banks, right? They were sort of high net worth individuals. asset managers. So we wanted to somehow connect those two, right? And in the early days, I'd be running around meeting small businesses, trying to understand their problems. We'd be meeting these investors. Actually, we put up a website, and a lot of investors got in touch saying, hey, if you can give me 10% a year yield, I'd be very interested because interest rates are very, very low. So I remember it was actually easier to find the capital, and then we were trying to match it with these businesses. We weren't very tech heavy in the beginning. We were actually trying to find this product market fit to connect capital to these businesses in a structured way. So yeah, very scrappy. Seeing what could work. But when I sort of realized that this was making a massive difference was when I would visit these businesses that we were supporting, and they would be like, we're relying on you guys. You're helping us more than the bank is, and you're much more responsive.
So there was a kind of direct relationship with the final customers in the end. So you were speaking with them. It's not just a platform that they were using at the time.
No. We were really curating the experience. Like cash flow and working capital for businesses. It's like the number one thing that they worry about. So we quickly learned that they needed a relationship, right? So they want to have everything seamless on the technology that you can do. They don't want to go and meet anyone necessarily, but they do want to have a relationship, whether that's digitally on the phone, and feel that you're there for them. That was really important, because finance is finance is tough,
and it's a relationship job in the end, right? I think
it's probably the most important. Yeah, exactly. So we were a small team, we were hustling, we were experimenting, we didn't raise a lot of money. And actually, I think that was a good thing, because it forced us to really zero in on the problem. And I see now there's a lot of businesses that have raised like a massive seed round, and they don't necessarily have even a problem to solve, right?
That's actually a very good point. The one about money looking for a problem is a pain right now, to be honest, because I think that we experienced that overall in the fintech market between 2021 and 2023. Valuation actually skyrocketed a lot, and then we came back to earth for good reasons, with good valuation, with proper valuation, I would say. And I think that right now we are kind of going again in the same direction of having valuation that are not logical, at least. So I'm not sure if AI is driving that or not, or if it's just greed again. But I think that we are more or less experiencing the same problem. But I was thinking about your first seed round. So you basically raised a 350K seed round that is probably today small friends and family in the UK. You see probably seed round going 10 times that amount right now in the UK, even more, I would say.
100%. I mean, it's crazy. I mean, to that point, in that period over COVID, 21, 22, there were people raising money via Zoom, never meeting anyone, via Zoom in 4 weeks, raising
It
like
was
6
crazy.
million seed round. But look, that was an era of like free money, super low rates, liquidity pumping. As rates have risen, it's become hard again, right? But there are still a lot of people who are enamored with the dream of investing in the next Revolut, and there's a lot of tax incentives to invest in startups. So even now at the smaller end, it's easier to raise money than when we started. When we started, it was really tough, right? Like there was no real VCs. We had to go to sort of people that we'd work with in finance. And I still remember though, when you talk to someone in banking, they're like, what's your EBITDA going to be in year
And
three, right? And we were like,
no idea
we
of
don't
that.
know. We don't know what that's going to be. Yeah, we have no idea. It's kind of binary. Maybe it works, maybe it doesn't work. Yeah, it was a totally different environment. But I think it's a good thing that people can
Absolutely, yes.
raise money for their ideas now. And that's there's so many now examples of great businesses being built in London and Europe. And
To be honest,
that's
this is one of those kind of topic that I've been speaking a lot recently. I think that is one of the best moment ever to actually build something in Europe. You've seen like the Stockholm ecosystem, Berlin is coming back a lot. In Paris, there is a huge ecosystem for AI. I think that right now it's kind of diminishing the kind of gap that we had, for example, compared to the US or compared to certain countries in Southeast Asia. So I think it's a wonderful moment to build here. But I was thinking about 2 points that you made. You were thinking about low interest rate, and from the other side, the fiscal incentives on investments, like business angel investment in startups. How much, given the fact that you are coming from this background and from a financial background, how much do you think that is a topic, in this industry? So how much do you think the kind of valuation that we see and the kind of innovation growth that we see right now is driven by low interest rate and fiscal incentives on those kind of investments?
Well, look, I definitely think when interest rates are low, there's much more demand for speculative investment. I mean, that's not a very insightful comment. I think
Yeah,
that's kind of very basic. And then, I think coupled with very strong incentives in the UK with you can offset losses against taxes, through these schemes. That's really driven a lot of new people to come into the market. And, I know many angels who say that they do double the amount of investing because of this
did
enterprise
did you
investment
do
schemes
some
or
angel investments
small
over
enterprise.
time?
Yeah, yeah, yeah. I'm also, I'm also doing that. I like to think that I didn't do it because of
Yeah,
the tax incentive, but because I was genuinely trying to help people like myself when I started, interesting founders, interesting sectors. So I did about 20 investments, probably at the peak of the
nice.
market, actually. So I don't know how financially rewarding it will be, but it has been good to support the ecosystem and meet interesting people, try and help here and there. But yeah, like I think definitely that there's a lot more demand. But now with interest rates higher, there's definitely more of a focus on profitability. And securing permanent capital, and that's one of the reasons why we sold the business to a bank, right? Because through the cycle, having the stability of a bank balance sheet to fund on our like get the liquidity for our working capital products, that through the cycle is the best way. If as a non-bank, when interest rates are low, you can get some great deals, you can scale faster, you're not captive to sort of regulatory capital requirements. But if you sort of average it out across the cycle, when interest rates go up, you still also need access to capital. And what we found as a business is that when interest rates went up 5x in the UK or so,
Yeah.
that really impacted our
Yeah.
business
No, that's
a
that's a
lot.
really good point. And let's come to the main topic here. So you recently sold the company. First of all, congrats, because it's not always easy to make an exit like that one. And second point, how was it? How was the experience of, first of all, coming out of the company that you actually raised and grow over time? How was the deal experience? So tell me about that experience overall.
Yeah, look, I mean, I think for us it was a long journey. We started, it was over 10 years that we were running the business. We had launched new products. We had great periods of strong growth. We also had more challenging periods. I remember like after Brexit, during the beginning of COVID, coming out of COVID, when rates went up. Fintech lending businesses are tough businesses. I think I'm not the only person to say that. Credit businesses are tough. So we had thought once or twice about selling the business. Actually, before COVID, we thought about it. We had some strategic investors in our cap table. Banks. We had Barclays Bank and Santander in our cap table who came in the Series B. So we kind of understood how banks operate and look at the world. And yeah, I think ultimately we could have continued as like sort of a non-bank, but if you really want to if you want to do a lot of lending in the sort of the mass market, so I'm not talking about subprime or niches. If you want to do like general lending to SMEs, having the bank balance sheet and the infrastructure of the bank and being able to offer more products through the bank platform is super interesting. And because we probably didn't have enough capacity to become a bank ourselves, that's when we started to explore
Because you didn't
mergers.
have a banking license, right? So you never got it.
No, we never. Yeah, we never got a banking license. In hindsight, that would have been a good idea, probably. But that's a totally different kind of. You
Yeah.
need to have the
Yeah.
right people. You need to have a lot of capital. You need to have investors who are going to support that journey because it
Takes at
takes a
least
lot
two
of time,
years, I would
especially in
say,
the
to
UK.
to
It
get
takes
in.
like minimum 2 years and probably costs about £8 million or so all in. So that's a big decision. And so we decided to start talking to banks, and we had a number of conversations. It is hard to sell to a bank because
Mm.
they're not venture capital firms, right? They have a framework with which they sort of value things, the metrics that they care about. They're also regulated, right? So they have to
Yeah.
explain
I,
their
I see I
decision
see at least a
making to the
couple of
regulator.
problems to sell to a bank. The first one would be capital ratio. So they need to be sure that after the acquisition, their operation and everything else still remain on a safe level. So that's always a problem. Buying a startup that most of the time is, of course, in a loss and not in a profit. And so that's a problem. And the second point that I see there is the technology side, because, you do things as a startup in order to scale quickly and to move faster. On the other side, they do things the totally opposite way, so they do things in a safe way to cover all case scenario. They take a lot of time to, develop, integrate, and everything. The post-deal integration for a bank, in my opinion, is kind of complex when they're acquiring startup. And in fact, if you take a look at the current stage of the aggregation wave in the fintech market, you see a lot of fintech to fintech aggregation and not many banks acquiring fintech in the end.
That's a very good point, which is, we had some people on my board saying, why don't you explore fintech to fintech, sort of more like horizontal mergers. But that, for me, that doesn't necessarily solve the structural issue, right? Because a lot of these fintechs, especially fintech lenders, we're all sort of in a similar position that we all need access to capital. We don't have a bank. We don't have banking licenses. So I was more excited about doing a bank vertical integration, right? So bank into lending, because it makes a lot of sense, right? There's loads of banks that have big balance sheets, but they don't know how to build the product. So that made a lot of sense. But everything you said is true about the difficulties. I would add also compliance, right? Compliance has become a huge deal for banks. We were lucky because at Kriya, we've always run our business as if we were kind of regulated in terms of anti-money laundering, background checks, etc. But this is something that banks are very focused on, because that's where things can get very
ugly very quickly.
Right?
I totally.
People lose their jobs, right? So, and I guess, look, the other thing is culturally that people, I'm generalizing a little bit, but there's many people in banks who are not rewarded. There's not a reward mechanism for taking risk, right? They are more rewarded for playing it safe, abiding by the rules, and not rocking the boat, right? And doing an acquisition takes some guts, takes some vision, and I think that was why it happened. Why we did a deal with Allica Bank is that the leaders there, the CEO there, and the board there are very much like, we want to build a better. We're building a digital bank, doing new things. We're sort of shaking things up to really help our target demography of small businesses. They really focus on small businesses. That was a really good cultural meeting, and it was tough. There's, the diligence was super tough. There were times when it was, very difficult to get everyone aligned. So you do need that vision and why we're doing this.
And how much time did it take, the entire process, from first conversation to get the deal done?
Yeah. So, I guess we started talking to people over a year ago, and we had some conversations. It was sort of, we didn't start like a aggressive process necessarily. We were just exploring things. And then I think it took probably about, 6 months from really getting into, we want to do something, getting a term sheet signed.
It's not that long in the end, to be honest. Also compared to usual M&A process.
Yeah. I think that it wasn't too bad. It was pretty intense, right? We had to really focus on it and park some of our sort of business objectives, just because we had to focus the mind. We're not a huge team, so yeah, it takes a lot of energy. Definitely takes a lot of energy. But I would say that, in hindsight, you should always be thinking about, okay, yeah, if you think your company's going to IPO, fine, you can continue that, but probably spending a little bit of time with the people who potentially could acquire you. I think one of the reasons it was a bit more accelerated, is I had known the CEO of Allica for a while. We had tried to do some partnerships when he had other roles in banking, and so we had a relationship already. We knew of each other, and I think that really helped.
And do you think that, given the fact that you already had other traditional banks in the cap table, do you think that they actually considered to buy you first, or they took some conversation and then they decided, no, okay, this is not for us, or did they never consider something like that?
I think they must. They were obviously in the best position to buy. We had a very good partnership with Barclays that was working well. I think we could have done more. I think COVID in a way came a little bit in the way. We were ramping our partnership, and we could have done a lot more together. I think with these banks, it really, as I said, it really requires someone to take a risk and sort of say, hey, look, we're going to push this forward. Of
Yeah.
course, there's a bit of a tension in banks. Like, what do they build themselves versus what do they partner with? But you're starting to see now bigger banks. Alec is a good example of a first mover, doing stuff. But already I think you're already seeing, even as recently as the last few months, there's a few more stories around banks trying to
Yeah.
do fintech acquisitions. And I think that's also because valuation expectations are sort of now at the right level, because a lot of ourselves included, a lot of fintechs raise
Yes.
money at very high
Maybe too high.
valuations. Yeah, maybe too high. And that's difficult for banks because banks have to account
Mm.
for purchase prices in different ways, especially when you're paying above the sort of net equity value of a business. The regulators really penalize that because they don't want banks
Yeah.
doing
And
like
also
crazy
good luck to
speculative
calculate
things.
that net value for a startup that is in high growth, they can propose a high
Exactly.
price because they are onboarding a lot of users, but if you take a look at the balance sheet, then it's kind of complex to justify that price.
That's exactly the issue. The balance sheet, the
Yeah,
sort of black and white numbers of the balance sheet don't always tell the full story. But then also like the sort of VC story also doesn't necessarily
exactly.
translate into
That's the
the
problem.
balance sheet, as you say. And that's been a big blocker of these deals. So if yeah, so I think there was going to be some tough choices and we had to make a tough choice, which is like, do we put the company into a place where it can really thrive and continue and grow, or do we just keep chasing sort of a growth story and try and raise more money? But after a certain
Yeah,
point,
no, I
you have
totally
to make
agree
a
with that.
decision.
And you're still involved right now, in the post,
Yeah, yeah, yeah. Yeah, absolutely. No, there was a big part of this transaction was around the talent at Kriya. We have a great team. We're actually adding to the team. The Kriya brand will remain. So we have a lot of good value in the Kriya brand. In the UK, a lot of businesses know of us, have used us. We get a lot of inbound traffic on our website. So we keep our name within Allica Bank. And yeah, no, I'm like reporting into the CEO of Allica Bank. We have exciting plans, and
nice.
potentially we'll work on more products together. So yeah, it's great. It's great for the team, and it's very exciting actually for new people to join us because you can kind of work on new things within the Korea division, but have the
And
stability of
so
the bank behind
that
it.
brings me to another kind of questions, I would say. So, given the fact that you are still growing and you're still taking a look at new products to bring to the market, which are the main trends that are you looking at right now in the fintech ecosystem? So, there's been, a lot of conversation about stable coins, accountants, and covering entire flow end to end with a specific platform, with a single platform. And I was wondering, which are the main kind of things that you're looking at right now?
Yeah, look, I definitely think a broader trend, if you think about when we started, it was all about the unbundling of banks. Like there were these big banks, and then the fintechs came and said, okay, we're going to do money transfer, business finance, consumer finance, payments. There was a lot of like pure play companies. I think what's happening now is the rebundling of banks, where, they're, like very successful digital banks that have started. How do they actually become an app that can cover all use cases? Now, Revolut is a great example of that.
Yeah,
Starling, Monzo, they're starting to add more functionality around their customer base, whether that's like, making tax digital, whether that's automations, whether that's, more lending products. So that I think that's a very strong theme, which is like banks becoming
Mhm.
like universal apps and offering, and not just making lending income, making like fee income as well, because that's very valuable to banks. I think what we're looking at with Allica is the whole theme of embedded finance for business transactions. That's something that I've been very interested in the last 3 years, which is you've seen the success of payments
Mhm.
companies going into apps,
Yeah.
Klarna, and like embedded lending on the consumer side. But for businesses, it's still a very broken process. It's not digital. They have to go to a bank, get some money, and then like manage it all themselves. I think it's gonna, finance is gonna move to
Mm.
B2B checkouts in the same way that it did for consumer. And then of course, yeah, like, I'm personally very interested in stable coins and, crypto, where crypto meets traditional finance. And I think crypto had to mature and it
Absolutely,
is
yes.
maturing now. And some of these use cases will be interesting, but that's probably a step in the future for some of these
Yeah,
for some of the
I
banks.
agree overall. I think that there are a lot of very different use cases that are still not covered. Like, for example, I was recently taking a very good look at account payments for businesses. that are very interesting, that are still very, very traditional, and everything revolving around cross-border payments that is, let's say, in the middle of stable coins and SMEs banking. And I think that there's still a lot to do for those companies, for SMEs specifically. And I think that we can still see a lot of improvement there. Also, something that I think that is going to, let's say, not disrupt, but at least help the ecosystem a little is going to be the regulation from this point of view. I think that, for example, what we saw with open banking, both in the UK and in Europe, some years ago, that enabled, all the embedded finance and the open finance market. I think that we can see actually the same when stablecoins get regulated. For example, we saw a little bit that with MiCAR, but take a look, for example, what happened with the Genius Act in the US that actually opened the kind of market for all companies. I think that something like that in Europe could potentially boost and grow the entire ecosystem immensely.
Yeah, 100%. I think we really need to make sure
Yeah.
that we're not over regulating. And I remember going back to when I was telling you about the beginning of fintech in London, because the government didn't over-regulate, that really helped, right? And tried to make things simpler. So we've really got to make sure that it's not just happening in the US; it's happening in Europe, because we're really well placed
Absolutely,
to be
yes.
here
Absolutely.
to do these things.
And maybe one last question from my side. We have been talking, about valuation being a little bit inflated right now, and I was mentioning potentially that is the impact of AI on and the AI trend on those kind of valuations. Did you take a look at that trend, and are you working on something for Kriya internally on AI?
I think, look, we've been very focused on our acquisition and combining. We are using AI tooling. It is incrementally helping us a lot. We've never been a company that sort of said, because of AI, we're going to be like 10x more valuable. But we see a lot of use cases for it to be incrementally very useful in risk management and underwriting and modeling, in customer service, in how we deal with customers, in how we reach out to customers as well. It's helped a lot in marketing. It's allowed us to go much faster. It will, of course, if used correctly, it will make the company much more efficient. We will need less people, right? For sure. So it is. I'm a believer that I don't think it's a silver bullet. I don't think AI is just going to like take over the world anytime soon. I think it's gonna add and cumulatively build, and will become smarter and smarter. It'll make us more and make us more efficient. A bit like how the internet, helped in the beginning. So yeah, I don't think. Yeah, I'm probably not as bullish as, like, I mean, when I say not as bullish, I obviously believe in it, but there's a lot of companies just sort of
Yeah.
spinning an AI story to raise the next round, and I don't think that's
It's the same
smart.
concept that you were making in the beginning. It's kind of a problem. It's kind of a money looking for a problem. So sometimes I see this kind of trend in the same exact way. So it's kind of putting AI on everything just to raise the next round. That is not the concept behind the technology, in my opinion. So the technology is there to
Yeah,
stay, and it's not going anywhere anytime soon. But it's not the solution to all the problems in the world.
exactly. Yeah, and I don't think we're going to hit this sort of. There's not going to become a moment where like this AI bot is going to take over the world. I think that fear
Yeah,
is
fingers
way
crossed, I would
past
say.
in my mind. But I
I,
might be
I hope
wrong.
you're
I
not,
might be
to be
wrong.
honest. Okay, Anil, it was a very, very interesting conversation. Thank you very much for joining me today. And congrats and good luck again for
Yes,
everything that you're
yes.
doing with Kriya.
Thank you, Michaela. Nice to talk. And
Absolutely,
yeah,
yes.
let's do it
Happy to
again
have
at
a
some
follow
point.
up later
Thanks a
on.
lot.
Thank you again. Bye bye.
Bye.